On this channel, I have been on record for continuously saying that I believe earnings season is the best time or opportunities to buy amazing businesses for the long term. It's also the only time of the year when a stock can go from a compounder to an absolute garbage pile. So today, I'll be sharing a few of the companies in my portfolio with the best earnings and some of them with the worst. I'll be giving my updated outlook for the long term and my plans to either buy, sell, or hold the stock. And of course, it's always going to be buy more. Because on this channel, since we're Real Man's investors, we buy amazing businesses that we understand very deeply and we have a long-term outlook for them. We are not complete pansies and don't sell out because of one bad quarter. And thank you to my beloved 2 channel members, Redwood and my boy SoFi Boy Major Speed. Thank you very much for your support. Alright, let's roll the intro.
Hello, I like money.
I want to start the video off by sharing this amazing tweet from Dividend Growth Investor over on Twitter. When Starbucks stock sold at $110 per share, everybody loved the company and was calling it a quality compounder. Nerds. When Starbucks stock sells at $70 a share, everybody hates the stock, they're calling it trash, Starbucks is zero, etc. Share price drives the investment narrative on FinTwit. It is honestly hilarious to see how many people are terrified of short-term underperformance and short-term risks in stocks. It's also a time where people with pre-instilled biases against companies, like making your coffee at home, or just not comprehending that people don't want to pay $5 for a cup of coffee or something like that, can easily go out and talk negative against a company. And as somebody who may not be ready for that negative sentiment, it can really definitely impact you. But as investors, we need to be convicted in our companies. Since we fully understand what we're investing in and we're holding these companies for 20, 30, 40 years in the long term, you need to put things in perspective. It's also very easy in a time where companies like Nvidia have been riding up the S&P 500 to compare short-term underperformance to an index like the S&P 500. You need to look on a long-term time horizon and reevaluate yourself. And I'll leave you guys with this. Do you believe that in 1980 and 1990 with Warren Buffett and his core holdings that he was going to make millions and billions of dollars from, do you really believe that he was worried quarter to quarter what was going to happen with his companies? He's even said he doesn't care what happens quarter to quarter with companies like Apple these days. They're just strong and amazing businesses, so that needs to remain the same for our holding. Let's start off with the worst stocks, because on this channel we want our great companies to go down in price. We could buy them at an even more reasonable price. To start off, obviously the big bad scary wolf here is Starbucks. Starbucks had a really tough quarter, down 15% by earnings per share expectations and missed revenue expectations by 6%. Now, revenue year over year was only down 1% in general, so it's not as bad as people are really making it out to be in the grand scheme of things, but still, there was a lot of pre-instilled hope for Starbucks' growth story. Thankfully though, for us long-term investors, the long-term growth projections are still in place. But there is definitely a lot of uncertainty ahead, and if there's one thing investors do not like in the short to medium term, it is uncertainty. Starbucks stock has now fallen to a 52-week low and is red over the last 5 years. A lot of the performance chasers will not like that whatsoever, but as somebody who has owned the company since my investing journey began in 2020, I'm still very confident in the company long term. I've done my research with this business, and I'm very bullish on them still long term. In fact, it's the best time to buy your core holdings when everybody's counting them out. People are saying they're going out of business. People aren't drinking coffee in 10 years. Get out of here. Coffee is the biggest drug in the entire world, and people are addicted to it. I think Starbucks has a lot more to offer than just being a coffee shop, and I will happily pick up some shares of this amazing business at a discounted price. Now, my cost per share in Starbucks was about where it was pre-dip at $85, so I'm about 15% down on my position right now. As I've learned very harshly recently, nothing is impossible in the stock market. I could see Starbucks falling even more as well, which is why I've been a little more conservative with my buying recently. I've been building up my cash position, and I want to see where the stock kind of flattens and averages out over the next couple of weeks, but I will definitely be investing a lot more on this dip. With any company in my portfolio after earnings, if they're trading higher or lower, whether I want to buy or sell, I let the news kind of, sit in my stomach for a few days and make a more rational decision. I think it's a solid rule of thumb to have. And before the earnings even came out, I think that Starbucks had a lot of pressure on it regardless, really just not to mess up, and they kind of had a poor quarter. I'll be honest, it wasn't the best quarter from Starbucks, but there definitely were some positives to take away. They've retained market share in the United States. They're still the #1 go-to coffee option outside of at-home coffee in China. They've seen a lot of good success with their lavender-style drinks, which are basically their new spring theme. I think Starbucks is dealing with some serious issues right now in the short to medium term, but long term, I'm still so bullish on this company, and nothing with my thesis has changed. I am being a little more conservative when it comes to my buying price just because of the recent outlook and the potential for it to fall more, but still, I'm so bullish on this company long term. I don't care what anybody says. Next, we have AbbVie, and AbbVie had a top and bottom line beat on EPS and revenue. Now, AbbVie, I have one issue with. Now, their stock is currently on a bit of a decline, so if you're looking to get in now, it could be a potentially interesting time. But circle of competency is my huge thing with AbbVie. See, with healthcare and pharma, it's such a giant business. There's so many moving parts. There's so many trials, test runs of things that are going on. Whereas a shareholder who really values circle of competency and what I'm understanding when I'm putting my money in, it's kind of one of those things where it's like, yeah, I gotta just kind of trust the management here, and I don't love that. With that said, though, their free cash flows don't lie. I like their management. I like their CEO. I'm definitely reevaluating AbbVie, but the stock is trading on a bit of a decline recently and trading at a high dividend yield if you really value that. Regardless, though, I think the company's pretty strong. They're doing a really nice job of recovering from that Humira patent loss as well. Next, today, Apple reported earnings, which many people are calling a success. They beat both on top and bottom line on earnings per share and revenue. They also announced a dividend increase of 4.2%, which once again people are underwhelmed by. I'm not surprised whatsoever. And another $110 billion in buybacks, which is absolutely insane knowing their buyback history already. This could be an indication that Apple thinks that their stock is at fair value, but the stock is a wild after hours, trading at 183 right now. I was buying Apple on the dip earlier this month at 168 and 170, and I'm happy to see a little bit of short-term gains, but I still think the company is pretty fair value at 160, 170. I see a lot of people that are also upset about the 4.2% dividend hike as it's lackluster and their payout ratio is like 15% relative to free cash flow. I would say this. I think buybacks at this point are probably the more efficient way to go in terms of Apple's actual business. They get a lot of tax advantages and it also drives the share price up. I think, though, over the long term, as they kind of max out that buyback potential, I think that money's going to have to be allocated somewhere and it's going to be a dividend. And those dividend increases will be giant. But I can't predict the future, so you never know. iPhone sales declined 10%, so a lot of people are also pretty bearish on that, negative overall. I still do think that Apple's one of the best businesses in the entire world. I love Tim Cook. I love their management. I love their innovation. They'll find something else to innovate with. It's such a strong business. I can't doubt it whatsoever. There's a reason Buffett has such a crazy holding in it. I think the standard for kids today is iPhones. As somebody who's in school and has been seeing this stuff for a few years now, and as kids go more digital, I think Apple's the go-to option. A lot of kids in school will use Apple. I think you're kind of an outlier if you use Androids. I hate to say that, but I don't see a lot of people who use Androids. I think that's going to continue for generations coming up. 160, 170, I'd love to buy more Apple. Alright, a few extra stocks that had really good earnings as well. One of them not in my portfolio, but Google, they just announced a dividend, some buybacks, and a crazy quarter overall. And as well, Microsoft, which is the largest holding in my portfolio. Another great quarter. There's death, taxes, and Microsoft beating their earnings report. Alright, I want to leave you all with this. Quarter to quarter earnings really don't mean shit at all at the end of the day. If you have an awesome business that you're convicted on, you've done your due diligence, you've done your research, you talk about it in a community in the Discord, link in description, we just bounce ideas off each other in there. It's really quarter to quarter earnings don't mean anything at the end of the day if you have a long-term thesis of the company, long-term as in 10, 20, 30 years. I hope you all appreciate the little angel voice that I am in the right side of your head. If you appreciate that, hit that subscribe button. We're here no matter the bull or bear market. We'll be buying the dip. Thank you guys for watching. Smash the like button, subscribe, and do dividend stocks, drugs. Have a good one.